Hello and welcome to another update video about AVAX. AVAX Avalanche so far looking okay, looking okay. Haven't broken support and I'm still following here an overall bullish scenario. The reason for that is quite simple, because the trend is up. Okay, so we have been putting in a 5-wave move of the December lows, which is an impulse. We've come down in 3 waves. That's basically a good confirmation that the trend has shifted, at least temporarily, to the upside. Always bear in mind, there's never certainty, only probabilities. Then the idea was that we put a wave 2 in here. So wave 1 to the upside at the January top, and a wave 2 down here, which was at the time the logical conclusion after a 5-wave move up, after a 3-wave move down that came quite deep. Problem that started was here, that this move, so we would have expected to be in a 3rd wave. Problem that occurred here was that this move up was only in 3 waves. It failed to put in a 4th and a 5th wave. So it has to be something corrective. That's my view. So the idea is not anymore that this was a 1-2 setup. I mean, we talked about that in previous videos anyway, just doing a recap for people who've just joined sort of the channel. The idea is now that this here was a wave 1. This here was an A wave, this was a B wave, which is basically part of a correction, and we're coming down in a C wave. Now, I'm saying ABC, basically for a C wave, this now has a correction where it shouldn't have one. So I've already labeled that as ABC move itself here on the right-hand side. So I think I just simply didn't update it because it should be saying WXY, so that the move down of the January high was a wave W in 3 waves. The move up was an X wave in 3 waves, and the move down a Y wave. We explain all of that stuff in our channel membership. If you're interested to learn more about Elliott wave, we've got all the cheat sheets and stuff like that, and we explain the different structures, how you recognize them, and so on, with the Fibonacci targets and so on. In case you need some education about it. I understand it's difficult. A WXY structure, just to explain it briefly, is a so-called double combination pattern in this case. It means that we have several ABC structures, several corrections connected to each other. Happens more and more in modern markets, and the wave W is an ABC, the wave X is an ABC, and the wave Y is an ABC. The reason I'm putting that onto the chart is that it would be in line with my expectation currently for Bitcoin. But note that, of course, we are in an uptrend. It could, of course, rally straight away. This is possible, technically possible. If we break above that X wave high here, I think this is actually quite likely. That would be at 2160. At the moment, I'm exploring the view that this move down was an impulse, so an A wave. The move up could be a B wave. Resistance for the B wave is between $19.09 and $20.52, and the move down would then be a C wave. Again, the view is, to make it very simple, that as long as we're holding $12.99, the focus can be on higher. That doesn't mean we have to come down to $12.99. It also doesn't mean we have to come down to $14.86. It doesn't even mean we have to come down to $16.18. This is purely support. As long as we're holding support, and these are levels where price should at least show some reaction. But as long as we don't break below $12.99, the focus is up. I always try to visualize it a little bit like, and we talk about that again in the channel membership a lot. And I realize a lot of people don't, will like more education like that. And honestly, we provide plenty in the membership, which is very reasonably priced, I think. But it's basically like that, right? Anybody who wants to buy, and I'm not telling you how to do it, it's just one reasonable strategy that I typically adopt when I trade these. When we get close to a support zone, starting to scale in, basically you have one position you want to place, but you don't buy all in, all out. You just scatter your trade, you split that trade into different positions, and you start very small up here, small, bit larger, bit larger, bit larger, largest position down here with very close to the stop loss below the box. But ideally you leave it a bit more space, because sometimes you get the sort of wicks to the downside and your stop gets triggered and then it rallies. But the idea of that is that if you buy here, yeah, and it still fails, you only risk a little. Yeah, if you buy here with a smaller position size and it fails eventually and your stop gets triggered, you risk little. If you have a large position down here and it fails, you still risk a little because you have a large position size very close to the stop loss. If it rallies and goes up in a third wave directly from here and you only had a little bit of your position filled, so what? Be happy. You're in profit. The market is doing exactly what you want. It's moving in your direction. All it means is that you haven't got your entire position filled. But guess what? Most professional traders don't get all their positions filled, right? Because then you can take that spare cash that wasn't used for that trade in another position, in another trade, right? There's no need to get an entire position filled. Yeah. In fact, when you don't get your entire position filled, it means the trade actually goes into the desired direction. And you can use that spare cash to look for another setup like that. Okay. A lot of people need to overcome that idea that, oh dear, I only got like 20% of my position filled. Well, guess what? It's in profit, right? Be happy. So, yeah. And, you have to decide where you want to start to scale in, right? Some people might want to start here in the box. Some people might want to start above the box. Just because it's support, it doesn't mean the price has to get there. It's likely, but it doesn't have to. And some people who then get disappointed that the price might move a little bit above the support area might want to start a little bit early, just with a bit of a smaller position size. It's very simple. So you cannot always predict where exactly a low will be. Often you can do it quite accurately by using fib levels, but what you cannot predict, you can manage by tactics. And then you use here my favorite triangle. But that's how I do it. This is for a pullback trader. Some people don't like to trade pullbacks. Some people try to trade breakouts. I've just realized that this strategy of scaling in, scaling out over the years, especially in crypto, it works so well because you get these crazy days like today where the market just turns around at an instant. And if you have no position, then you chase. Now you don't need to do this, but if you don't do it, you're going to chase. I rarely chase because I'm typically positioned if I want to be positioned, because I buy the pullbacks, okay? But yeah, that's just sort of a little bit of background information. I just realized a lot of people like that. But if you want to learn more about that, we provide a lot of education in the membership. Had a few live streams about the topic. So yeah, we've got that whole live stream library. But that's the idea now that we're turning around here, possibly in a B wave. And then the idea would be, right, depending on your strategy again, when you had a few positions filled here, even if it's only little, you can start to scale out in resistance, right? Just to, how to understand that, because some people don't understand how to trade Elliott waves, and that's fine. Because technical analysis is not a replacement for trading skills, very important. All right, but anyway, that's my update about AVAX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.